All right, so get ready for something different today.
Different how?
Well, we're always digging into articles, research papers, the usual.
Yeah.
But today, we're going undercover, like fly on the wall style, into a live trading mentorship call.
Ooh, interesting.
Yeah, no editing, no polish, just raw, unfiltered insights from this trader, calls himself the Inner Circle Trader.
Catchy.
Right, or ICT for short.
Okay, ICT, got it.
Think we can decode his secret sauce.
I love this kind of stuff.
Yeah,
It's like getting a backstage pass, seeing how a seasoned trader thinks on their feet.
yeah,
You don't get that from a textbook.
exactly. And he keeps using this phrase,
Hmm.
the algorithm. And that got me thinking, right? Because algorithm in trading today, that could mean a million things, high-frequency trading especially.
Oh, absolutely, yeah.
So how does ICT use it?
Well, it's almost like he's saying there's a code beneath the market.
A code, okay.
Yeah, a rhythm to the chaos.
I like that.
He's not just talking about, lines of code on a computer, but those forces, those underlying currents that move prices.
So it's like he's saying the market, it's got a mind of its own.
Kind of, yeah. And his big advice, don't fight the algorithm.
All right. Now, is this guy for real?
A lot of experienced traders, they'd actually agree with him on that.
Really?
It's less about outsmarting the market, more about getting in sync with it.
Okay, how do you do it?
Think of a surfer, right? They don't control the waves, they ride them.
Okay, so how do we learn to surf the market, ICT style?
Well, he talks about this thing, algorithmic price action.
Algorithmic price action. What is that?
So it's like those patterns you see on the charts.
Yeah.
He thinks they tell a story, reveal where the market might be headed.
Okay, so he's reading the tea leaves, but with charts.
Kind of, yeah. And this is where it gets really interesting.
Go on.
He ties this idea to the classics, supply and demand,
Right. Class
order
spread.
flow, even sentiment analysis.
Yeah, he uses those terms.
He's saying those aren't just, textbook theories. They're the gears behind this whole algorithm.
So it's all connected for him.
Exactly.
Yeah.
And he even suggests, right, that the pros, the ones who get this code,
Yeah.
they might be using it, maybe not maliciously, but to their advantage.
Interesting.
Especially when it comes to, well, let's say less experienced traders.
So using the force against the newbies.
He doesn't quite say that, but...
But you can see it. And to prove his point, he uses actual examples.
Oh, yeah.
Dives into the dollar index.
Okay.
Starts throwing around these phrases, fair value gaps, order blocks.
Oh, getting technical.
Then there's Judas swings. Man, it's a lot.
Don't worry, it's not as complex as it sounds.
Break it down.
Fair value gaps, think of those as sudden jumps or drops in price.
Okay, like flash crashes almost.
Sort of, but they create these imbalances in the market.
I see.
Order blocks, those are like traffic jams of buy-or-sell orders.
Ah, so everyone's trying to get through the door at the same time.
Exactly. And then you got Judas swings.
Which sounds ominous.
Well, imagine a price move that tricks traders.
Tricks them how?
Makes them think the market's turning around, but it's about to take them for a ride.
Ouch, that's gotta hurt.
It does, and this whole algorithm talk, those Judas swings,
Yeah.
it can sound risky, right?
Super risky.
But then ICT, he switches gears,
How so?
emphasizes patience, managing risk.
Okay, so he's not all about those risky moves.
No. He even says he hasn't touched certain currency pairs in months.
Really? Why not?
Says the story wasn't clear in the price action.
It takes guts to say, I don't know, especially as a supposed guru-type figure.
Right. But maybe that's key to this whole algorithm thing.
You think so?
Knowing when to back off when the data, or in this case the price action, is too murky.
So don't force it.
Exactly. Sometimes the best trade is no trade, especially when the market's acting erratic.
Like you said, don't fight the algorithm.
Right. It's like that saying, if you don't know where you're going, any road will get you there.
Not exactly a winning strategy, at least not with trading.
No, not at all.
And speaking of knowing where you're going, this guy, he gets really fired up about the futures market.
Futures. Okay.
Specifically, the E-mini S&P 500. I swear, half the call, he's glued to that chart.
Interesting. And what's his take?
It's where his strategy, it gets kind of controversial, even a little bit out there.
Oh, so?
He talks about purging and reverting. Basically how the market shakes out the weak hands, the noobs, before it continues on its merry way.
Okay. Interesting.
So is he saying the market is like deliberately trying to trick people?
Not necessarily on purpose, no. But he does seem to believe that those big, sharp moves, they weed out the traders who are in over their heads.
The over-leveraged ones.
Yeah. Or the ones without a solid plan.
So it's the test, almost.
Exactly. The market's testing their conviction.
And he sees these shakeouts as opportunities.
He does, yeah. Even points to those Judas swings as well, warning signs.
Wait, warning signs of what? Is he predicting a crash?
Not necessarily a crash, but definitely potential for, let's say, a sharp reversal.
Give me an example.
Imagine a stock, right, shoots up suddenly.
Yeah.
Traders, they see that. FOMO kicks in. They buy thinking it's going to skyrocket even further.
Right, classic.
And then, bam, it reverses course, traps everyone who bought at the top.
Ouch, those are the Judas swings in action.
Exactly. A head fake designed to, you guessed it, shake out the weak hands.
Okay, so I'm starting to see how all this connects for him. The algorithm, those fair value gaps, the Judas swings. It's like his own system for reading the market's mind, right?
It's like his own trading language.
But he's also laser focused on these really specific price points.
Like what?
The opening price right at midnight,
Okay.
and then again at 8:30 a.m. Why those times? What's so special about them?
He seems to think those are when the big institutions are making their moves.
Really?
Placing those large orders that create the imbalances he's always on the lookout for.
So those prices become like guideposts for him, right? Markers for potential trades.
Exactly. But he also stresses you got to be adaptable.
Meaning what?
Don't be married to a trade if the market isn't playing along.
Don't be stubborn.
He actually says, don't be a stubborn mule.
Which, let's be honest, is easier said than done, right?
Oh, absolutely.
We all want to be right
Yeah.
to see our trades work out the way we planned.
Of course. But he's suggesting sometimes the smartest move is knowing when to fold.
To walk away.
Exactly. Protect your capital, manage your risk, live to trade another day.
That's where his whole optimal trade entry thing comes in, right?
Right. He's not just looking for any entry point.
Yeah.
He wants the one that minimizes his downside.
Minimizes the risk.
Exactly, but maximizes the potential reward.
So he's like a sniper.
Exactly, waiting for the perfect shot.
And he actually uses those Fibonacci retracement levels, the 62%, the 79%.
Those are his guides for finding those sweet spots.
And just so everyone's on the same page, those Fibonacci levels,
Yeah.
those are basically like horizontal lines, right, drawn on the chart.
Yeah, like support and resistance levels.
Yeah, to help traders see where the price might reverse or maybe accelerate.
Precisely, and they're based on this mathematical sequence.
This is where it gets a little too mathy for me.
It's pretty simple. Each number is just the sum of the two before it.
Okay, I kind of remember that from school.
And for some reason, these ratios, they show up in the market too.
So he's blending math with his intuition, with all these observations.
He's built his own trading system.
His own secret sauce.
Brick by brick, observation by observation.
But even he says it's not foolproof.
Oh, absolutely not. He's always emphasizing, gotta keep a journal, review your trades, never stop learning.
There's something adapting.
Right, because the market, it's always changing.
He even tells his mentees, analyze my trades, see where I messed up, why I did what I did.
That's huge.
Right.
He's basically saying, don't just take my word for it. Test it out yourselves.
And that's the mark of a true mentor in my book.
Totally. Someone who wants you to think for yourself.
Not just blindly follow.
Exactly. To become your own trader, not a mini-me.
But he does also say, don't go it alone.
Oh, that's so crucial, especially in trading.
It can be isolating, right?
Especially when you're starting out, all those ups and downs, it's rough.
Having that support system, people who get it.
It's invaluable, that shared experience.
Like having a team of Sherpas guiding you up the trading mountain.
Perfect analogy. And it's not just the practical stuff.
No, what else?
It's the emotional side, too.
Oh, the emotional roller coaster.
Celebrating the wins together, dissecting the losses. That's how you stay sane.
Stay motivated, too, I bet.
100%. And ICT, he really gets that emotional side of trading.
Yeah, you can tell.
He talks about this trap, system hopping.
System hopping. Like jumping from one guru to the next.
Exactly. Chasing the hottest indicator, the biggest promise.
Getting lost in the hype.
And losing sight of your own process.
He's saying, look, there's no magic bullet in this game.
Right. The real edge is building a system you trust.
Sticking to it.
Managing your risk, staying disciplined even when it's tough.
Which, again, way easier said than done.
Oh, tell me about it.
He even goes on this whole thing about social media.
Oh boy, what about it?
The dangers of clout chasing. Trying to impress everyone with these flashy trades.
Oh, the Lambo crowd.
Like, look at me, I made $1 million last week.
When it's probably all smoke and mirrors.
Exactly.
Real trading, the sustainable kind, it's about managing risk, putting in the work, day after day.
Grinding it out.
Exactly. Calculated decisions, not emotional ones.
In ICT, you can tell he's trying to instill that in his students.
Oh, so?
He tells them, use the smallest leverage possible.
Really?
Especially starting out. Focus on consistency, on protecting what you have.
Not the Lamborghini dreams.
He says, slow and steady wins the race.
Makes sense.
Let those profits compound over time.
Which, let's be honest, isn't as glamorous as a Lambo.
Right.
Probably a lot less stressful in the long run.
That's for sure. But there's more.
There's more.
He also emphasizes having a life outside of trading.
Oh, that's so important.
Hobbies, loved ones, not letting the market consume you.
Because it's so easy to get sucked in, right?
Totally.
Staring at charts all day and night.
Thinking you always need to be plugged in.
That's a recipe for burnout.
Bad decisions too, I bet.
100%, he tells him take breaks.
Really?
Yeah, go for walks, get out in nature.
Interesting.
He says it clears the mind, reduces stress, you make better calls that way.
So it's about more than just trading the algorithm.
It's about understanding your own internal algorithm.
I like that. Your own psychology, your own rhythm.
Exactly. And he stresses the community aspect, too.
Right, having that support system.
He's built a really cool vibe in his group. Very supportive, collaborative.
Yeah, they share their trades, their struggles, wins too.
He even has them analyze each other's work, give feedback.
That's brave.
It is, but it shows trust.
Like a real trading family?
Exactly.
Yeah.
That feeling of belonging, it makes a huge difference.
Especially in a field that can be so, I don't know, cutthroat.
Absolutely. It's about creating that safe space to learn and grow together.
You know, the more we talk about this guy,
Yeah,
there's something really inspiring about his approach.
I totally agree.
He's not just teaching technical analysis, it's deeper than that.
Ah,
It's life lessons almost.
he is, and that's what resonates with people.
It's not just about the money, it's about the journey,
The self-discovery.
the mastery of it all.
Finding your rhythm in the market and in life.
Well said. Okay, so we left off with this idea of the euro and something about draw on liquidity.
Yeah, it's kind of a trading term, but it does sound a bit intense, doesn't it?
A little bit like something out of a vampire movie.
Right, but it's actually pretty simple when you break it down.
Okay, I'm all ears.
Imagine, say, a big institution, they need to sell a ton of euros, like fast.
Okay, they're dumping euros. Got it.
But they don't want to crash the market, right? So they might push the price down a bit.
Like a fire sale.
Sort of, to
Yeah.
a point where they know other orders are waiting to buy.
It's like a trap.
You could say that, a honeypot for buyers. Right. And then, bam, they unleash their euros, price drops suddenly. That's the draw on liquidity.
Wow, okay, so they're using their knowledge, their size to their advantage.
Exactly. And ICT, he seems to think he can spot those moments even before they happen.
No way, seriously.
Yeah, he points to these relative equal highs as, like, red flags.
Relative equal highs those are.
Think of them as points of resistance on the chart,
Okay,
like areas where the price struggles to go higher.
got it.
ICT sees those as potential reversal points
Because
that's where those big sell orders might be lurking, ready to push the price back down.
like a balloon, right.
Yeah.
You can only inflate it so much.
Exactly. He even uses that analogy. He's waiting for that moment when it pops.
That's kind of nerve-wracking.
It can be, which is why he's so cautious, especially with certain pairs.
Yeah, he mentioned the British pound being sloppy,
Right, sloppy. In trading terms, it basically means unpredictable.
like impossible to read.
Like trying to read a book with half the pages missing, you never know what's coming next.
And he admitted he hasn't traded it in months.
The signals just weren't clear enough, he said.
You got to respect that, the humility to say, I don't know.
For sure, especially when you're supposed to be the expert.
Right. Maybe that's part of this whole algorithm thing too, knowing your limits.
100%. Recognizing when the data, or the price action in this case, is just too messy to trade.
Don't force it.
Exactly.
So if he's steering clear of the pound, where is he putting his energy?
He seems to be really into the futures market lately.
Futures. Oh,
Specifically the E-mini S&P 500.
that's a mouthful.
It is, but it's a popular one.
All right. And what's his take on it?
Well, this is where it gets really interesting, even a bit controversial.
Oh, how so?
He talks about this concept of purging.
Purging.
Yeah, and reverting. Basically, it's his idea of how the market gets rid of weak traders.
Gets rid of them. How?
Through those big, sharp moves we talked about.
The Judas swings.
Sometimes, yeah. He thinks those moves shake out the traders who are over-leveraged or who haven't planned their trades properly.
So it's like a test of their, what? Their conviction.
Exactly, and he sees those moments, those purges, as opportunities.
To buy, to sell.
Depends on the context, but he's definitely watching those levels closely.
So he's not just reading the charts, he's almost, I don't know, predicting human behavior.
In a way, yeah, he's trying to anticipate how other traders will react to certain price movements.
And capitalize on their fear, their greed, all that.
He wouldn't phrase it like that, but yeah, he's definitely looking for those emotional extremes.
Because that's where the big moves happen.
Exactly, and he's got all these little tricks for spotting them, these patterns he's identified over the years.
Like his own trading playbook.
Exactly, and he's always refining it, always looking for an edge.
But he always emphasizes risk management, right?
Oh, absolutely. That's like his #1 rule. Never risk more than you can afford to lose.
Because even with all the algorithms in the world,
The market can still surprise you.
always. You know what's funny? The more I listen to this guy, the more I realize he's not just talking about charts and indicators.
Right. It's deeper than that.
Yeah, like he's trying to teach them a whole philosophy about the market, maybe about life too.
Totally. He even says trading is a mirror.
Ooh, I like that.
Right. Like it forces you to look at yourself, your good habits, the bad ones too.
Your demons, all of it.
Exactly. And he really emphasizes having a strong why.
Meaning like knowing why you're doing this,
Yeah. What's driving you, your goals, the big picture.
not just chasing that Lambo dream.
He actually uses this funny analogy.
Go on, tell me.
He says it's like a dog chasing a car. If the dog ever catches it,
Yeah.
it wouldn't know what to do.
Huh. That's kind of true.
Right. He's saying if you don't know what you want, why you're trading,
What you're working towards.
you'll just end up lost.
So it's not just about the money for him, there's something more.
Definitely seems that way. He talks about the satisfaction of mastering a skill.
Proving something to yourself, maybe?
Could be. And he also mentions giving back.
Giving back how?
Using his knowledge to help others.
That's cool.
Yeah, help them reach their own goals.
It's not something you hear a lot in the trading world.
No, not really. But he's also real about the downsides.
The downsides of that.
The emotional toll it takes, the stress.
Oh yeah, for sure.
He even talks about his own struggles, you know?
No way, seriously.
Yeah, moments of doubt, frustration, the whole 9 yards.
Wow, that's really honest of him.
It is, and he emphasizes having a life outside of trading.
Having a life besides the charts.
Yeah, hobbies, family, things to keep you grounded when the market's going crazy.
That's that whole work-life balance thing, isn't it?
Exactly, and it's something that a lot of new traders, they struggle with that.
Yeah, they think it's all about being glued to the screen 24/7.
And he's like, no, go for a walk.
Right.
Yeah, spend time in nature, clear your head.
He sounds like a therapist sometimes.
Right, but it makes sense. Less stress, better decisions.
So it's not just about trading the algorithm, it's about your own rhythm.
Exactly. Knowing yourself, your limits, when to step away.
And he really pushes that community aspect too.
Big time. His group, they're all in it together.
Sharing ideas, supporting each other.
Analyzing each other's trades, giving feedback. It's cool to see.
Yeah, that sense of camaraderie can make all the difference.
Especially in such a competitive field.
Totally. You need that support system.
100%. It's about more than just making money, you know?
It's about the journey, the learning, the growth.
Exactly, and having people to share that with.
Well, I think that's a perfect note to end on.
Really?
Yeah, we've covered so much today.
From algorithmic price action to Judas swings.
We learned about risk management, psychology,
The importance of finding your own path.
and maybe most importantly, having a life outside of trading.
Because at the end of the day, it's just one part of the puzzle.
Well said. So to everyone listening, thanks for joining us on this deep dive.
Keep exploring, keep learning.
And until next time, happy trading, everybody.
See you next time.